Hey, welcome investors to the 40 Finance channel. Checking in on the QQQ and the TQQQ right now. We just got past what I would consider a major stress test over the past 10 days or so, as we've had all of the FAANG M names come in except for one. If you're new to the channel, I've been building up my QQQ and my TQQQ at a very small level here into January, because I just think it's getting harder and harder to pick individual stocks in this environment. Now, that being said, there's been a lot of folks who are like, whoa, what are you doing? Why are you getting into the tech sector now that things are on a sort of free fall? And in my opinion, if you look at the history of the QQQ, there's only so far that this thing can fall in the immediate future. And I'm not trading this on a daily basis. This is a long-term position for both the Qs and the TQQQ. So let's jump in and see where these two ETFs stand as of now, and I'll share my thoughts about where they might go here in the next 30 days or so. All right, first up, we got QQQ. And this is the much bigger portion of my investment, right? It's just a straight old QQQ. To me, it provides sort of an anchor for the rest of my portfolio and takes out the single stock risk that has just been brutal over the past 5 or 6 months, at least in my portfolio. And this video is an important update because we officially have all of the FAANG M names reported in the books. Still waiting on NVIDIA, and that's kind of a plus or minus if you're including them in FAANG or not. But Facebook's done, Alphabet's done, Apple's done, Microsoft's done, Google's done. And depending on what you do with the N part of the acronym, in your opinion, you've got Netflix in the books, and you've got NVIDIA pending. So a couple different ways to look at that one. All right, so this is a basic one-year chart with 50-day to 100-day. We got the RSI down here. And it looks like our bottom, our most recent bottom for QQQ was on 127. And we've been moving up basically through earnings season, at least to this point. You did take a dive yesterday prior to the close, but today that's not represented on this chart. The NASDAQ in general was up 1.5%. All right, switching over to the 3-month, and for me, and the way I see things, and the way I sort of mapped this journey out before it ever started, was I'm not buying anything this year on a green day or a positive day. I absolutely refuse, and I will only be buying on red days. We've had plenty of them to choose from, but I also have some other qualifications that I'm looking for. Most notably, I'm looking for this RSI number to get below 40 before I make any purchases. So in regards to that, if you look over here, I'm going to mouse the dates over on the right side, but the RSI itself is going to show up on this side. The last time that you could get under 40 for the RSI appears to be January 28th. And even if we go back to the close on Thursday, at least this chart's showing 42.85. So I was watching very closely Thursday because you notice like Amazon and some other names were tanking into a big day of earnings with Facebook and Amazon. And I held off because the RSI indicator wasn't there for me. And I sort of figured, like, just biting my nails as an Amazon stockholder, I was like, man, if that thing falls through, then we're really going to be up the creek, and it's going to create a much better buying opportunity. All right, switching over to TQQQ, and this is one that I get a lot of questions about on the comments. And just to be 100% clear, this is a triple leveraged ETF. I don't recommend it for anybody. This is more or less an experiment for me. I've done a lot of research on it. I feel comfortable with it, but I don't think that it's the best decision for everybody. And also very important to note that I don't have $100,000 in TQQQ. And right now I have 3 shares, okay? So I'm not balling out on this. I'm just adding when appropriate. And so far, I've had a very limited stretch that reached my criteria. And you can see on the T side, it pretty much runs in line with the Q side. I haven't been following this enough to know if the RSI for both of these runs in lockstep. I'm still kind of learning that and getting the experience. But even this week, when we had some volatility yesterday, as I mentioned, you did get down to a 40, but you didn't get below that. So this week was not a week to add TQQQ, in my opinion. All right, I mentioned at the top there that we've had the FAANG earnings, and that was a major stress test. And I'm feeling a little bit better about the footing of the market, but in particular, I'm feeling a little bit better about the QQQ footing, at least in the short term, because of the way that this one is stacked up, okay? It's a market cap weighted ETF. And of course, on the top of this top-heavy ETF is the FAANG names. And at least in the short term, we got past one of the volatility points that could have sprung up. Now, that's not to say that we didn't have volatility, right? Obviously, you had Facebook and Netflix both get hammered. But in some cases, for me, that's a good thing, right? Because it shows that Facebook or a stock like it can get absolutely destroyed. And yet, throughout that whole thing, the Qs didn't really move a whole lot. In fact, depending on where today lands, I believe the Qs will be net positive for the week. Outside of the PayPal fiasco, the Facebook fiasco, Amazon losing a little bit of steam, particularly heading into earnings. So taking some big blows, PayPal not as much, because we'll see here in a second, they're not a huge part of the Qs. But at the same token, it was good to see the QQQ take some huge shots to the head and still standing sort of strong here. Okay, so I got this spreadsheet here. What the heck is this thing? Well, everything that's in yellow represents positions that are about 1% or more in the QQQ, okay? And if we bring all these together, this is just the percentage weight, you have a sum of 70% of the index. And you can see the numbers off to the side, 2 through 24, there's only 23 names in here, all right, that represent 70% of the ETF's value. Now this changes, it's market cap weighted, right? So PayPal, I don't know where they were last week, but more than likely they were up higher than they sit right now. I just downloaded this thing last night, which would have been Thursday evening, and I'll probably post this video on Saturday morning. So PayPal's probably in the scope of adjustment. I would imagine that Facebook will probably get adjusted in this formula somehow. But you get the point, right? These are the names that determine, which way the Q is going to go. All right, so off to the side here, this earnings adjusted, that's a fancy pants way of saying, did they have earnings yet? And just going through and kind of manually ticking these off, we have 1, 2, 3, 4, 5, 6, 7 names in the yellow highlight that have not reported earnings yet. So AKA, in my opinion, they could present some volatility for the Qs in the short term. Now, of those that haven't reported earnings yet, the big dog is really NVIDIA, okay? This is the one that a lot of people would say is arguably overvalued, certainly across most semiconductor metrics. So to me, this is the last real big roundhouse kick that the Qs could get. On the bright side, AMD had a positive quarter, so maybe things are going well with NVIDIA. We'll have to see how it shakes out. And interestingly enough, and I just adjusted this Pepsi, it's actually February 10th, it was February 3rd. We're not going to get a heck of a lot of news next week either. Pepsi will come in on the 10th, and then we're probably looking out the next week, right? So into 2/14, the week of 2/14, we're going to get NVIDIA, we're going to get Cisco, and who else is on here? Well, outside of my yellow names, you have Applied Materials, and I'm sure there's some others. If we scroll down here, we would find some others, but I'm most concerned about the heaviest part of the index, which is at the top. All right, now switching over here to Seeking Alpha, I created sort of those names that I had in yellow on the spreadsheet, I made sort of a portfolio, right? And I just put those names in it. And what this allows me to do through Seeking Alpha is just get some high-level metrics on all of these stocks and just see like, hey, how are valuations going right now across most of the key names? And quick call out here, if you're interested in learning more about Seeking Alpha and possibly supporting the channel, my affiliate link is in the description and it gives you a significant discount on 1 year of their premium subscription. So check that out if you like what you see here. And just eyeballing these forward PEs, I know I've talked a lot on the channel. You know, Apple and Microsoft are running much, much hotter than their historical levels. However, they just passed the earnings test, and I'm not saying that these can't go down, but I will say that most of the threat to their, let's just say, expanded multiples probably has passed. Now, you could still have some outside interference from things like interest rates and inflation scares and stuff, but we know where Apple and Microsoft are going for the year. They've already told us, right? Now, things can change, but for the most part, they've made their projections, and the only thing that's going to bring this number down is if there's unexpected events, which of course happens across the stock market at any time. Then you got Google. I say Google's fair. Amazon, a lot of debate about Amazon and this number 55. I wouldn't be surprised if it came down a little bit, but I would say the bulk of the decline has already been had. Then we go down the list, you know, Tesla, arguably overvalued, but they've already posted their earnings, so I kind of feel like they're sitting where they're going to sit. Facebook just got hammered. Now you're down to an 18 on the forward PE. Next up, we got NVIDIA. And of course, I've already mentioned, you know, a 55 forward PE for a chip stock is absolutely bonkers in a normal time. We will see what NVIDIA has up their sleeve, but certainly I would call this out as a risk in general to the index. But the impact, again, this is one stock that represents 3.5% of the QQQ as of today. So without question, if NVIDIA tanks, the Qs are going to go down as well. They're not going to go to zero. They're not going to get cut in half. They're probably not even going to go down 10%. But obviously, when you're in the Qs, you're rooting for all the companies to do better as opposed to worse. All right, so those are the big dogs. What about our price to sales? Because we know that in the stock market right now, there's still plenty of tech stocks that have price to sales numbers that, frankly, you haven't seen in a very, very, very long time. So let's just eyeball our price to sales. And, you know, going up and down very, very quickly, the majority of these names are under a price to sales of 10. That's just a made-up metric by me as far as a health check goes. You got Microsoft, Tesla, NVIDIA, and Adobe who are running over 10 in this first pocket of names. Adobe is a software stock, so they often have higher multiples. However, I'm not trying to justify it. I'm just trying to say you can look at segments like cybersecurity, databases, etc., and these price to sales are going to look like bargain basement prices compared to some of the hyper growth names. All right, and then how about price to cash flow, which is obviously becoming more and more popular metric to look at. You know, Apple's not horrible for as high as their PE is relative to their history. I'll go ahead and say anything under 25 is at least in the realm of reality. You can see Google, who I don't think anybody's arguing Google's valuation right now. They're at a 20x. Now, on the flip side, we have our usual offenders, right? Tesla, 90x, NVIDIA, 73, Adobe, 33, and I think those are big ones. Netflix, which outlaid a ton of cash to create new content. This number is supposed to come down this year, but I'm not sure what level they're projecting. All right, last thing we'll do here on Seeking Alpha is just eyeball these names under the lens of Seeking Alpha's sort of popular filters, which is their quant formula, author outlook, or I guess author sentiment for a stock, and then Wall Street analyst sentiment for these names. And I had to sort these in alphabetical order because I didn't have market cap on this particular screen. However, if you just eyeball it, obviously orange is kind of a hold number. It's a 1 through 5 ranking, so 5 is the highest. And I'm not putting a lot of stock in these numbers necessarily, but it's just good as you go down through here. There's no reds, there's plenty of greens, and even the quant formula, which technically should be unbiased, you at least have a lot of hold signals coming through here. As a matter of fact, it looks like Netflix and PayPal, likely due to their recent momentum, are the only ones clocking in under a 3 for Seeking Alpha's quant formula. All right, guys, so that's this week's check-in on QQQ and TQQQ. It was a very important week. It's been a very important 10 or 12 days for the Qs to get past those FAANG earnings. Yeah, we had some casualties, Facebook, PayPal, Netflix. We talked about them, right? But bottom line, the Qs will likely finish the week net positive. And it doesn't mean that they're going to skyrocket to the moon from here. But what it does mean is we have a little bit of stability, perhaps at this 355 to 360 level in terms of QQQ price. Now, on the leveraged edition, TQQQ, for me, I didn't get any buy signals this week, and I'm trying to really hold true to that because I think in this volatile market, really we could wake up any day and see the NASDAQ go down 3%. We did see that, at least temporarily, once already this week. So I'm trying to hold true to the rules, see if I can stick to it. But bottom line for me here in the first part of February, feel great about where I'm sitting, and I love the prospects for most of these stocks in the second half of the year, regardless of inflation threats and very small interest rate hikes. I think some of those concerns are overblown. I think they are real. They're real threats, but I think the level to which those threats get to, in my opinion, are overblown. We'll see how it shakes out. That's just one person's opinion, and obviously there are plenty of people that disagree with that. All right, guys, hope you enjoyed this update on the Qs. Please give a like, subscribe to the channel. Don't forget to check out that Seeking Alpha premium special offer in the description. We'll see you on the next video.